Hello and welcome to CMC Markets Trading Outlook for the week of October the 6th, 2014. My name is Colin Szynski, Chief Market Strategist. This looks to be another busy week for trading, but it's got a little different theme than last week. Last week's theme was all data driven and we had huge announcements coming out. This week is a little bit different and my topic for this week is fall back or follow through. We had a huge finish to the week with very strong US non-farm payrolls report coming in with a 238,000 above street increase, as well as a huge increase to the last month's number, a big upward revision that also took it higher and showed that the U.S. employment situation really is very strong, and that the U.S. economy is continuing to grow, and that the pressure on the Fed to become more hawkish going into next year continues to increase. So what did we have? Massive rally in the U.S. dollar against pretty much everything, 1% plus gains pretty much across the board through much of Friday, plus nice big rallies for the U.S. indices. The question is, as we move into the new week, is will this be able to follow through? U.S. dollar in particular has had a big rally over the last few weeks. It's overbought against pretty much everything. And the question now is Friday the last hurrah, or is it the beginning of another leg up? Will we get follow through in a week when we don't have very much news coming out of the United States? The only real announcement, significant announcement from the States this week is Fed minutes from the last meeting. That's backward looking. They had a press conference already. They had member projections already. They've had members out speaking since the meeting. So really, how much the minutes are going to add at this point to where the Fed is going, it's pretty hard to see, particularly compared to the impact already that we've had of the non-farm payrolls since then. So as we look at U.S. indices, I'm going to bring up a chart for the U.S. 30, and for a moment here, just to show what's going on here. And interestingly enough, as we are there. As we are trading on Friday, we are seeing a significant rebound here. Interesting, we had a correction through much of the week, a hammer on Thursday, and we are getting a bit of a rebound on Friday, but we are not getting anything close to a new high. This is 17,000 here, and it is still emerging as new resistance. We have a lower high here for the Dow as well. So really, even though we're getting a trading bounce here, this emerging correction still seems to be intact. So can we get follow through? Can we get the Dow back above 17,000 and continue to climb, take another run at its previous highs, or are we going to see this correction reassert itself? If we see a failure at 17,000, first support's in here about 16.9, which is a Fibonacci level. The previous low from Thursday was about 16,680, and the big support is here, 16,600, where we get the 200-day moving average converging with a 38% retracement from the previous advance. Similarly, here we'll look at the broader index. We'll use the U.S. small cap, the Russell 2000, which unlike the Dow, it's been leading the way lower for quite some time. It's had a pretty good correction already, and as we can see farther down here. Okay, as we can see anyways, we've seen it come down. It's picked up some support over here around 1080, and it has started to rebound a little bit here, back up towards 1110. If it can carry through, we'd be looking 1120, 1130, 1145 as potential upward resistance points. If it does roll back, then, and here it is short a little bit of its 10-day moving average, so we would want to see it starting to cross that to show any kind of a follow through. Can the indexes still go higher? We're heading into earnings season, as well as a quiet week. The Russell will really be the one that gives us the indicator. It's been leading U.S. indices into the correction. If this correction is over, we would be looking for it to lead indices back out once again. The big action we're also looking for this week is in the U.S. dollar, and that's pretty significant against a number of major currencies. The one area we are going to see a focus on news this week is in Asia Pacific, and this is fairly normal, but we do have two big central bank meetings this week. One is in Japan and one is in Australia, and they're both on Tuesdays, so fairly early on in the week, and that could set the trend for currency trading. But the yen in particular is one currency that's been hit really hard against the against the U.S. dollar, and what we're looking for here is to see, is there any kind of a sign of what may be a turnaround. As we can see here, as it's rallied up, hugely overbought on the RSI for the yen. But as we get up towards the trading, what we can see is that, in fact, we've had this massive rally, hugely overbought RSI, but guess what? This is actually starting to level off, and we've had one probe up above 110 that failed, a couple that have gotten close, including on Friday, with all of the strength and all of the interest and all of the bullishness about the US dollar. It can't get through, hasn't been able to get through 110. What does this mean? It means it's probably getting pretty fully priced here. Expectations of a more hawkish Fed have probably been fully priced into the markets. This could set the stage for a correction. So when I say fallback or follow through, can we get follow through up above 110 for the yen, or are we going to see it fall back? If we do see it fall back in what would be a normal trading correction, where could we see initial support? Maybe around 109. The previous low was more closer to 108. 23% retracement is closer to 107.80. So we could see, as is this, it starts to move into this sideways training channel. There is room for a bit of a fallback in the yen. And meanwhile, the other thing I wanted to do was compare the yen with another defensive market, which is gold. Gold, while the yen is bumping up against its highs, gold has actually been breaking down again. It's remained under pressure here, and it has actually taken out the 1200 level on Friday. It, however, is starting to approach this major support level here at 1180. We saw a big double bottom near 1180 for gold, and it is starting to get a little bit oversold in the RSI. So even though we're seeing, and also we had this distribution trend here, then the momentum actually accelerated in gold. We could be getting close to some kind of a washout in gold, but it's too early to say. So will we get this follow through taking it back down below 1180, or will we see the US start to drop back? And what's really interesting is when we look at our client sentiment figures, shows us something very interesting about sentiment towards the US dollar and towards the yen and gold in particular. We have here the in terms of position value, clients have 93% of positions are still long US dollar yen. That means clients were expecting the US dollar to carry through 110 and keep on going. But interestingly, the number of clients has receded. It's closer down to 50-50 in terms of the number of clients that think the dollar may continue higher versus the dollar may start to stabilize here. And what's also interesting is we actually have a contradiction in client sentiment here, because while we've got 95% of clients trading the yen thinking it's going to go long, we have 70% of clients trading gold, and actually 80% long gold. A long position in gold is a short position in the US dollar. So you've got gold traders short the US dollar, you've got yen traders long the US dollar. So clearly at some point one of these groups is going to be wrong, and something's going to give. But it does suggest we're still at perhaps an extreme point where perhaps this change in the number of clients is in the yen is starting to tell us that perhaps the long US dollar that has dominated for the last 6 weeks or so, it may be starting to get close to exhausted. Maybe we're getting due for a correction, and perhaps what we might be seeing today with this big spike up in the US dollar could be a short-term buying climax, and we could be setting up for a correction into the week of the 6th should we see the US news start to dry back up. Another market that we're looking for that could be quite active against the U.S. dollar is the resource currencies, and in particular the Aussie dollar, the New Zealand dollar, and the Canadian dollar. I'm going to start with the Aussie and the Kiwi because their news is more front-ended in the week. We do get early in the week. We get the Australian RBA decision. We also get the Australia unemployment during the week. So we could see the Australian dollar be quite active. And to start with that, we have seen that the Aussie has been under a lot of pressure lately. it's really fallen out of bed since the beginning of September. I mean, look at this. Almost every single day, big down days, one after another, after another. After another heavy selling pressure, but the Australian dollar has gotten really oversold here on the RSI, moving into the late September and early October. It's testing here and it's probed down, and it's been testing its 52-week low down here around 86.60, and is testing it once again. We'll see, does that start to hold? Do we see this continue to stabilize between, say, 86.60 and 88.20? The big thing is from the RBA meeting is not so much what they do about interest rates. Nobody's really expecting them to do anything about interest rates. The question will be, do they say anything about the Australian dollar? And the reason is, I'm just going to switch charts here for a moment, and I'm going to go to the New Zealand dollar. And the reason for that is that the RBNZ has been aggressively talking the dollar down, and it's one of the things that's actually dragged on the Australian dollar. The RBNZ has been aggressively not only talking its dollar down, and we've seen right from the beginning of July, it's pounded it down 88 cents down to 77 cents. But on top of that, we're actually seeing that it has, I'm just going to extend this chart out a little bit here. There. And not only have they aggressively been talking it down, but they've actually been intervening in the Forex markets. They announced recently that during August they were selling New Zealand dollars to the tune of several $100 million. So they've been aggressively pushing the dollar down, not just talking, but backing it up with actual money. Now, the last time it did this was in the early part of 2013, where it pounded it down from the about 86 cents, again down to about 76 cents. So the New Zealand dollar is now getting down to the point where last year the RBNZ let up and they stopped talking it down. They stopped aggressively interfering in Forex markets. Once again, it's back down into that area. So it is possible that even though they just announced they have intervened, they could be getting close to potentially being done. If that's the case, we could see the Kiwi dollar start to stabilize here. And what does that mean? Well, going back to Australia, and the Aussie dollar at this point with the RBA meeting, what's the most important thing? Are they going to continue to try and talk the dollar down? Governor Stevens has been complaining about the value of the dollar for quite some time. He's been trying to talk it down. Australia, however, has not yet gone in and actually intervened in Forex markets. Does the RBNZ do it? Give them the cover to go and do it as well? Or are they going to be somewhat more pleased with the fact that the dollar has fallen enough? Has it fallen enough for them to say, okay, fine, we'll back off from intervention, even though and just keep talking about the dollar? That's what the key will be when we look at the RBA meeting this week, and also when we look at the Australian employment. Will that be soft enough to get them to back off talking about intervening in Forex markets as well? So we could see quite a bit of action in the Australian dollar off of that news. The other resource dollar we want to look at this week is the Canadian dollar, and we'll use US dollar CAD for that. Now, we'll just remind everybody that when we're looking at US dollar CAD, that when this is going up means the US dollar is going up, Canadian dollar is going down. So, like the Aussie dollar and the Kiwi dollar, the Canadian dollar has been steadily retreating over the last few months as well. And interestingly, from 106 to 113, well, maybe it isn't up 10 cents, but it's still up pretty substantially. This decline is in line with what we've seen pretty close to seen with the Australian dollar. We had a big bump up here on Friday, and now the Canadian dollar is testing 112.75, 112.80, its March peak, and the reason for this is that we had not only did we have the strong U.S. payrolls, but we had a soft Canadian trade balance. We had a small trade deficit in Canada. This is likely explained by the fact that crude oil prices have gone down so much, but all the same, the streets have taken this as being somewhat bearish for the Canadian dollar. So we've got a big retest here. Once again, will we see the US dollar follow through, carry above 113, or will we see the US dollar start to fall back here and have a correction against the Canadian dollar? The RSI has actually broken out of a bit of a downtrend here. It's still close to overbought. overbought. We've had a pretty sizable run in the last few weeks, so technically we could start to see a correction. And where we might see more action in the Canadian dollar is later in the week. We have the Canadian jobs report coming out on Friday, so we could see the loonie active right through the week, not only on action in what's going on in the U.S., what's going on with the U.S. dollar, is the U.S. dollar so overbought it's ready to correct, but also on Canadian news itself, particularly later in the week when we get to the big Canadian jobs report. The final chart, a couple of final things I wanted to discuss briefly. First of all, look for some action in the crude oil market. It's been a pretty wild and woolly one for both Texas and Brent, but I'm going to show the West Texas chart here in particular. And what we're seeing here is it's been under a big downtrend for quite some time. Had been trying to stabilize in this 91 to 95 range. It's now broken down again. It took out it plunged down here under 90 and bounced off of about 88.80, came back above 90. It's now testing 90 again. So does it hold this big round number or not? Technically, the RSI has a positive divergence, so it's suggesting that perhaps you could see the downward pressure against oil start to ease. But if we see it break 90 again, there could still be some significant downside for it. So and it could become more oversold. That can always happen. So keep an eye on crude oil. It could be have another particularly volatile week as traders try to figure out, are we at a bottom? If the US dollar backs off, that could give it some room to rebound. If US dollar follows through, we could see oil follow through to the downside. The final thing I want to talk about this week is it's the kickoff to earnings season. And there's a few things to note. We begin with the Alcoa earnings report on Tuesday after the close. And this could be fairly significant for a couple of reasons. First of all, Alcoa is significant to metal prices and obviously particularly base metal prices. What this could show us is what's going on with demand for metals. Is the slower economy everywhere except the United States and perhaps the UK and Canada dragging on its results. And the second thing we want to watch for is with U.S. multinationals going into this earnings season, because we've had such a massive rally in the U.S. dollar in a very short amount of time, what is this going to do to Q3 earnings? For two reasons. First of all, if you're a U.S. company that's trying to export, your goods have become a lot more expensive in a very short amount of time in foreign currencies. Secondly, if you're a U.S. company with big overseas operations, the profits of those operations coming back to the United States are going to become a lot smaller than they were in the last quarter because in US dollar terms all of a sudden those profits have shrunk dramatically. So what does this mean for earnings reports? Alcoa may be the first one to tell. We've got to not only manage that, but we've got to look for what are they saying in guidance? What are they saying about the impact of the US dollar on their operations? This could be a big theme running through earnings season this year. Alcoa could be the first place, the canary in the let's call it the aluminum mine instead of the coal mine. But seriously though, the Alcoa could be the first harbinger of what's going on and how does the U.S. dollar rally impacting corporate earnings going forward. Interesting, we've seen the double top in Alcoa here just short of 1740. A big rally, hit it in July, hit it again in September. It's been backing off. It actually took out its first support level here around 1560, 1570. That's starting to move in as new resistance as well. First Fibonacci support is here around 23.6. We've broken the 50-day moving average. The 200-day moving average and the 38% retracement are coming in here in this 1365 1385 kind of range. So potentially Alcoa is looking vulnerable here, having already broken the 50-day with downside possibly in a correction back towards the 200-day moving average. So it looks like it's going to be another active week for trading right around the world. The big thing we're watching for with all regions is the do we get the follow through? Do we get the fallback in the U.S. dollar? One final thing I'd like to look at is the British pound, because we've seen it be quite active over the last few weeks here. And I'm just going to bring this up briefly, but we did get another breakdown on the pound here. It's taken out 160, which was a big round number here, and it's also bounced off its pre-Scottish vote lows. It had a nice honeymoon rebound on that. The U.S. dollar has reasserted itself. Now you've gone under 160. You've cleared out a whole pile of stops below 160. You've got more potential support here in this 158.60 to 159 area. Do you follow through and start taking out these lows, or are you setting up for a potential rebound in that as well? You've got a positive divergence here in the RSI. You've got an old oversold RSI as well, so for some potential for some room. So to wrap up, follow through or fall back is the big story heading into the new week. Will we see the US dollar continue to carry higher, or has it become so overbought it's ready to fall under its own weight on the back of that? There's no new US news coming out to push it higher. There's still news coming out in other parts of the world that could move the markets, and we're heading into the beginning of earnings season. So still looks to be an active week for trading, and we wish everyone luck for the coming week. That concludes my remarks for this week, and I look forward to speaking to you again next week.